We're back here on another topic. Of course, today is going to be really diving into the markets because as we are recording this, the markets are in absolute craziness right now. Many people would say, hey, the market is oversold. Some people say, no, this is kind of the cycle that we deal with every day. So we wanted to get Sal Gilberti coming in from Tucrium. How are you, Sal? Nice to see you.
Nice to see you, Paul. Doing well. Doing well. It's interesting times.
Man, well, some people would say it's the best of times and it's the worst of times if you look at the two different market signals that we're seeing. One of the biggest market signals that we have to take a look at, of course, is what's happening with the ETFs. And here we'll go in and show something that I think is important. This is the Bitcoin ETF. Spot Bitcoin ETFs, as you can kind of see, we've seen a variety, but this is a fairly significant outflow streak right now. 13 days in a row, outflows totaling 4.5 bill. 17 of the last 19 trading days have been outflows. This came from Jeff Seyfert coming over from Bloomberg. When you look at ETFs right now and the activity that we are seeing, not necessarily with the XRP ETFs, but definitely with some of the Bitcoin and even Ethereum ETFs, do you think this is an extended issue that we're going to be facing, or is this short-term pain?
I think it's short term pain. I think what we're seeing is just a rotation. Remember, Bitcoin and these ETFs are becoming mature instruments. They are accepted by advisors, not, certainly as Bitwise has been saying, pounding the table, they're not universally accepted by any means, but they are definitely mainstream, which means that you're
Mm.
going to have a rotation of money. If you find a better use for your money and you don't see a near term change in direction, for instance, Bitcoin's been going down for a lot of different reasons. It's
Mhm.
just a momentum flow. I'm not particularly worried about it. I do think that over time, Bitcoin's got to answer some of the questions about the quantum challenges that they face,
Yeah.
and I think that those are serious in terms of big money and long-term allocations. But near term, this is nothing more than rotation. You see it in stocks and we see it in crypto as an asset class. That's all it is.
Yeah, well, the thing I think that's interesting to me is many people will try to compare these ETFs from Bitcoin to the trading habits of the OGs, and you just can't. This is nothing like a Bitcoiner that has been trading in the market for some time, where they essentially hodl through almost everything. That is a completely different makeup of the investors that are going into these ETFs, and I think that's the one thing that people have a mismatch on in understanding why ETF volatility is what it is. The thing, though, that is interesting to me is that the lack of volatility with some of the other ETFs, specifically to the XRP ETFs, do you think there's more retail there, or do you feel like, no, this is actually institutional selecting XRP as a completely different asset class than Bitcoin? What would be your opinion?
I think it's more retail still in XRP. I
Mhm.
think that XRP has yet to be adopted on an institutional scale in portfolios via the ETFs. Now that's coming. Okay, you got people announcing that they're doing that. Some of the treasuries are putting XRP in, but a lot of the treasuries are actually doing tokens themselves. And so I do think that it's important to realize that XRP is way behind Bitcoin in terms
Yeah,
of institutional adoption at the ETF level.
yeah. Well, and with that being said, you look at, because I was talking with an analyst just the other day, and one of the things that we got into was what would be the potential, because you're holding at, I think, 1.1 bill right now. Could we see a 5 billion potential in terms of the roll-ups on ETFs for XRP? And his statement was that he felt like it would be about 5% of the holdings of what Bitcoin and Ethereum ETFs are doing. So you look at that, that's about 110 billion, again, not excluding some of these exits, but that would be a pretty significant bump for XRP ETFs going forward. And if you're right that we haven't seen institutional moving into this just yet, this could get very interesting in the coming months and years. One thing that is unique, I think, with XRP is what's going on with the XRP ledger. And I'll share this with you guys right here. This, of course, is the XRP EVM sidechain now live with RLUSD. So now we have RLUSD as a multi chain expansion. this is good for Ripple in general because it does mean we're going to see adoption across, I think, a whole new set of smart contract based ecosystems. Is this good for XR? Well, it's good for XRP anytime RLUSD is being used, but do you think this is good for XRP as an ecosystem?
Definitely. I think it's just part of the expansion of the ecosystem. So wherever it can be used and wherever the ledger can be used, it's just an expansion of the system. It's wide adoption. It gets people used to it and it gets it up and running. I think that one of the things we all underestimated was the speed at which things would get up and running. And it's
Right.
been slow. And so as we move forward, as we get towards the end of the year and DTCC starts moving more ledgerized transactions,
Yeah.
I think that the underpinnings will come. Again, the price isn't exactly corresponding with people's expectations, but the price is always right. And so for whatever reason, you see a rotation out of XRP right now for that's short-term money. I still think that's short-term money and asset
Okay.
allocation on more of a retail level, just people going with what's hot. I do
Yeah.
think XRP is oversold. The charts, you can do a lot of damage on the charts and you can pick numbers a lot lower than here. There's no
Mhm.
doubt about that. But I know a lot of people who are already starting to talk about when they start taking stock market profits, when they start taking those
Right.
equity risks off the table, they're going to
Yeah.
reallocate that back into a crypto. And we're in the XRP and Bitcoin and a couple other worlds, so that's what we hear about. But I
Yeah.
think you're
Well,
going to see a reallocation.
yeah, and that is definitely the rotation cycle that several people have talked about, and I would agree to a certain extent. The one caveat to that would be SpaceX, because this is an IPO that we have not seen the likes of before, could edge up to around 2 trillion. This could be a pretty major issue if we see retail rushing into this, because many people say that's why part of why we're seeing some of the Bitcoin price and Ethereum price, crypto price in general, exiting is in preparation for some of these big IPOs. What happens if retail gets hosed on these things? That could put a bit of a damper. What do you think?
I think it's going to put a bit of a damper on the whole macro market. I think you're exactly right. Some selling is happening in crypto for people to get some dry powder to buy into these IPOs. I
Yeah.
think that IPOs of this size, when you look back at the very few times that they've
Mhm.
happened, and I don't mean just a specific company size. I mean the amount of IPO money, the amount that IPOs are demanding of the financial capital, the free
Yeah.
capital that's out there. When you see that happen, and then generally 6 to 12 months later, you have a little bit of a problem. And
Yeah.
a lot of that is because insiders, the rules the way they are, your money's if you go through an IPO, you have to generally wait 6 months. That's
Mhm.
generally it's give or take with depending on your circumstances, but you have to wait about 6 months before you can sell your shares. And especially the way they've structured SpaceX where the employees all participate, that's a lot of shares they're going to come
Exactly.
free
Yeah,
6 months
coming due.
after. Then you've got Anthropic going public. There's a lot of IPO demand for capital that will, I think, put a damper on any markets, but particularly crypto, because crypto is still, it's more spare money. It's not core
Yeah.
money still.
Yeah.
And so I do think that people have to be extremely careful both with the IPOs and with what happens 6 to 12 months after these IPOs, and understand if they do cause a downdraft in securities prices, that is going to hurt everything. Okay.
No doubt.
That, that always happens, but it's temporary. And, stay the course, especially with
Yeah.
XRP. XRP has a use case. The things that have a use case, the things that are doing buybacks, the things that are either using the supply or diminishing the supply, those are the tokens you want to be.
Well, you're kind of alluding to Hyperliquid, which we'll talk about in a minute. But to your point, I'm showing something here from Sawyer Merritt, and what he's hitting on is this is crazy to me. Fidelity announced that it's making a SpaceX IPO available to any customer with a retail brokerage account with $2,000 or more in the account. It used to be 500K and it's now 2K. So you are essentially sucking up so much retail into these IPOs, do they think, and I look at this, I'm sure that the investment bankers have been courting a lot of these organizations out there in terms of these brokerage of trying to say, hey, we don't need this to fail. We're going to have to take in as much retail powder as we can to put this on the charts. This just seems very dangerous, Sal. What do you think?
It is extremely dangerous. I think that for two things. One, they've lowered these minimums over the years because it's just easier, and actually the infrastructure to allow
Mhm.
smaller investors to invest in IPOs works. The other thing is IPOs used to be a bit of a frenzy, and we're seeing that with the SpaceX IPO.
Yeah.
But it used to be a company needed more capital, and it caught on for whatever reason. It was popular, and it went to the market to raise capital. And I'm not saying this is the case specifically with SpaceX, but most IPOs nowadays, they're almost a peak, because what
Right.
happens is these companies trade in the private equity markets. They're marked higher and higher and higher, both justly and perhaps a little bit inflationary from the PE side to make their books look good and get higher fees. And when they think they can't mark them any higher, that's when they go public. I mean,
Yeah.
the PE market and the IPO markets, back in the day, you bought an IPO, you were lucky to get it, and you were almost guaranteed to make money.
Mhm.
Now, it's very rare that you make money over the first 6 to 12 months that an IPO comes out. You might get a couple positive days, and then all of a sudden the thing tanks. And that's because the private equity guys have marked it up as high as they could possibly mark it, and now they're selling it somewhere else, and they sell it to the public
Well, and
market.
this dump, just because of the size and the basically the gigantic nature of what this could do to the market is what concerns me. You've got the Dow right now hitting another gain plus 800 points on the day. That's as we're recording. So highest level on record. I don't know. I understand why we're seeing these kinds of numbers. I'm still in a bit of disbelief that this market can continue at this rate. And I've thought that this is going to pull back more and more, but here the Dow at 1400, where do you think this stops? Sal?
I don't know. I know the trend is up. I know that the charts look terrific. I know that, the trend is your friend, but I also know that a lot of stocks are not participating.
Exactly.
And you and I are experienced enough, Paul. We've been around long enough. This makes me really nervous. You got to
Yeah.
be in it, okay? But I think you have to be very, very careful. I think people like Warren Buffett, some of the bigger hedge fund managers, myself personally, I've got a lot of cash set aside
Mhm.
as a percentage of my portfolio. I'm unusually underinvested, and
Yeah.
I'm missing out. Okay. But I don't want to say it feels frothy, because the charts do look terrific, especially on
Yeah.
the Dow, but it does make you nervous, and you do need to be careful here. And remember, markets go down a lot faster than they go up. So people have to
No
be
doubt.
prepared
Yeah.
for
Well,
that.
that's the
Yeah.
thing. If you see a potential waterfall chart starting to form in some of these assets, many people, I think, will be in a position, one, of disbelief and whether or not they can get out in time. And some of those yields will just absolutely get erased so quickly. The other thing that happens when these markets get frothy is when I start seeing products basically coming into the market where I feel the demand is diminished. What I mean by that is this right here, and that is Bitmine now offering a 9.5% yield on new preferred stock. This is basically taking a page out of MicroStrategy's book with their stretch asset. So, what do you think about this with what Bitmine is doing? Obviously, the biggest DAT holder of Ethereum. Is this a good move?
I think that the fact that they're issuing debt and can sell it, good for them. I'd
Mhm.
rather see them issuing securities,
Exactly.
because they can hold on during a downdraft.
Yep.
So debt's got to be paid. If they get caught in a bear market after buying, okay, they still have to pay that 9.5%. They have serious cash needs.
Right.
That can get you into trouble. So, I much prefer seeing these companies, all these treasury companies in particular, selling stock on the rallies, so that they have just plain cash. They don't owe anything to anybody, and they can choose to do with it what they wish, and they can ride the down moves. It
Yep.
doesn't matter, like the rest of us.
Yeah, for
But if
sure.
you have to pay your interest to your shareholders, you may have to sell some of those assets you acquired just to pay that interest during
Which is
bad
exactly
times.
what's happening with Stretch right
Yeah.
now in MicroStrategy. to get those dividends off the rate. Of course, they are continuing to, I think, the negative position right now that MicroStrategy is in, along with what's happening with Stretch, is a bit concerning, especially for Bitcoin. One thing though that continues to surprise me is while the Bitcoin market and to a certain extent some of the traditional assets in crypto are melting down, you have moves like this occurring, and that is Visa, MasterCard, Coinbase, Stripe. They're forming a consortium now to launch a new stablecoin, basically to rival Circle and Tether. I want to thank our sponsor today, and of course, that is Uphold. If you are holding crypto right now and not earning rewards, you're essentially leaving money on the table. And the reality is, in today's market, you need to be able to move instantly. That's why Uphold's flexible staking is such a game changer. You can earn weekly rewards automatically on assets you already hold without a lockup. That's most important. You can sell anytime. It's the perfect setup for anyone who wants to grow their holdings without losing their exit strategy. Download the Uphold app today and try it for yourself. First of all, do you think there's going to be too many stablecoins in the market? And do you think they have a chance to be able to really take some market share away from the two power players?
Functionally, I don't think there can be too many. I think that, people have use for their own stable coins, so fine.
Yep.
Those are going to be niche markets. I'm not sure if you can challenge the big ones. They're just so ingrained in the usage. It's going to be really hard for anybody to challenge them.
Mm.
And so, and there have been several people, and I agree with them, who say, the stablecoin business is probably one of the greatest businesses ever invented. You take other people's money and you stabilize the volatility in a market, but you get to keep all the interest that that money earns. It's an
Yes.
astoundingly good business if you're the stablecoin issuer. And
Right.
so, look, stablecoins are a little interesting facet of the market. I do think that they took away from people's, just look at XRP, right? Everybody thought people would just buy XRP and deal with the volatility. Well, the way around the volatility is a stablecoin. Okay,
Yeah.
so XRP doesn't become the value holder, if you will, during the transaction. It just becomes the enabler of the transaction used for
No
split
doubt.
seconds. So it's a pure use case now.
Yeah, pure use case. Well, you look at a couple of points right now, and this is in reference to gold and Bitcoin, because I would say a lot of the XRP community aligns very good with the gold community. That's not necessarily the same when it comes to the Bitcoin community, because right now you've got MicroStrategy down, I think, 10.8 billion, facing its largest unrealized loss. So 6 years of buying Bitcoin, MicroStrategy is down 17%. Versus what we've seen in gold, and I hate to say, is Peter Schiff right that gold has essentially become the new default asset versus US Treasuries? If you look at the charts, it shows more people holding gold now than US Treasuries. Where do you think this plays out for gold?
I think people need to understand that assets are assets and they're volatile. And I think people might be surprised at the pullback gold can undergo. If
Mhm.
you look back to the 70s, gold, once gold blasted off after it got deregulated and we're allowed
Yep.
to trade it, it had an amazing pullback. I think it was something like 70. I
Mm.
know a lot of gold bugs who've lightened up on their gold and they are waiting for a
Really?
pullback. So
Okay.
I do think that everybody needs to understand an asset is an asset is an asset, and a T bill is a T bill. Okay. T bills are going to stay pretty stable. They're backed by the US government. They got that rate of return that you operate around. Everything else, including gold and Bitcoin and every other crypto and every other asset, including stocks, are going to be really, really volatile. And here's the deal. All right, MicroStrategy is underwater. They have
Yep.
unrealized losses. So what? It's just unrealized losses. They don't have to realize them. Their problem is the debt that they need some cash to pay off that debt. If you're everybody listening to this, Paul, has some XRP underwater, right?
Yep.
Are you going to sell at the low? No, you're going to hold on unless
Yep.
you're leveraged. Okay. If you're leveraged and
I
you
think that's
borrowed
a
to get it,
different
you have a
audience,
problem.
though. Don't you think the buyer of XRP is different than the current buyer of Bitcoin?
Yeah, I think that was happening. I do. Yeah.
Yeah, yeah. I'm looking at the gold chart here, Sal, and you're right. I mean, we saw this pullback right here. That was October 21. Definite pullback. This was an entry point that we did. Riding this up, and then here we are essentially on a pullback from where we were sitting at. When you look at gold in general, What do you think about that as in terms of the kind of pullback that could be happening in the coming, say, 12 months for gold?
Well, let's understand that gold may be a safe haven asset. It definitely is, but all assets go down on the black days,
Yep.
right? Let's say all these IPOs break the markets, 12 months from now. The
Yep.
markets just get exhausted and we have a monster pullback and it happens in a few days or weeks. Everything's going to go down. People need to understand that everything's going to go down. Might gold go down relatively less than, say, stocks or some of the fringe cryptos? Maybe, but everything's going to go down. The point is, what's the stabilizing asset in your portfolio?
Right.
If you've got 5% gold, you're probably going to feel pretty good about it.
Yeah. Well, and I think that's one of the factors right now that a lot of people are trying to figure out how do they diversify, what do they diversify into? It's really a new mix of assets. One group of people have been all in on crypto. I'm talking to more and more of those who have started to diversify their asset base, which is good. They're going into ETFs, they're going
Very
into
good.
some securities, and it makes a lot more sense in general. Obviously, the news came out with Ripple coming in to support with MasterCard. This was a big deal. And of course, this changes things pretty dramatically because now you've got RLUSD and the XRP ledger potentially lining up with one of the biggest retail services companies out there. This is a big play. I mean, this is great for Ripple. Could be great for RLUSD. We'll see how this, plays out. Granted, Mastercard's got to do some things, from an infrastructure side. Where do you think RLUSD is in a year based on clarity going through? Okay, we get clarity. We get this onslaught of new products and services coming into the market. Where do you think RLUSD is?
I think there are more will be minted than there are now. I mean, it's look at Ripple. I say it all the time. They're disciplined. They're focused. They're just growing. All this market volatility we've just spent all this time talking about doesn't matter to them. They're still
Yep.
going to grow the ledger, the use of that ledger, and the use case for XRP and everything around the ledger. And
Hmm.
that's what people need to remember. And I would caution everybody: cash is an asset. Don't forget, cash is
Yep.
an asset. And if you're earning whatever you're doing, short or long term, 3.5% or 4% or 4.5%, that's okay. It's only opportunity cost. And as the market gets more and more frothy, headed out to space with the SpaceX IPO, I think that people need to understand it's okay to be underinvested and it's okay to miss out a little bit in order to be safe. What is the price you would pay to be safe? That's all it is.
Yeah. Last question I have for you today is the clarity situation. Jamie Dimon has been very vocal on the issue of fighting to the end, as he said. What's your position right now on clarity? Do you feel like we're close to getting this through? Obviously, some very big deadlines coming down the pipe.
Honestly, I'm not optimistic. What I see in Washington, the paralysis I see, I'm just not optimistic on it getting done. I'm not.
So, not optimistic. I'm going to look at the Clarity Act polymarket this morning, still holding at a 57% chance. That's on the week, guys. So, we've seen a high right there of 64 this last week. And then, of course, we're sliding slightly at around 57%. Why do you think? Do you think it's just the treachery landscape that we're dealing with in DC, or do you think there's something greater at work here in terms of the banks and possibly even the broader market?
I think there's something greater. I think that people are greed is overcoming everybody and they're
Mhm.
they're fighting for their own self-interest, which isn't a bad thing, okay? But I just think that the the stakes are so high that the entrenched tradfi people
Right.
aren't going to give up easily.
Yep.
And Washington is so paralyzed and so dysfunctional all the time on things that need bipartisan support. Okay.
Mhm.
That that I just call it me. I'm a pessimist on politics. Yeah.
Well, the more I talk with political people, both lobbyists and many of the lawmakers themselves, I just It's a tough one for me to digest because at one point I felt like this was really an effort that was going to be unified. And, I think that I felt like the market was very behind this. We had the administration behind this. Now you have such, I think, division between both parties. This, of course, being one of the big factors of that division
Mhm.
is the Clarity Act and many of the things that are going to fall underneath it. But it really boils down to one thing, and that is, will the lawmakers try to do something that's beneficial for the American taxpayers? And that's the problem I have, is that they don't seem like they're going to.
They don't, and I do hope they do. And even a bad Clarity Act from multiple people's perspective is better than none at all. Because I used to work for Bear Stearns, and they used to say,
Mhm.
we don't care what the tax policy is, even if it's
Yeah,
bad tax policy. We just need to know what it is so we can trade around it.
yeah,
And
for
that's
sure.
what will happen here. If we don't get clarity and the Clarity Act passed, we're going to have regulations that can change with the whims of each new administration that comes in. It's going to be a disaster, and it's going to slow everything down. Okay, not going to stop anything, but it is going to
Yeah,
slow everything down. And we already have clarity on XRP. Don't forget, we already
yeah,
have clarity on XRP. That's a
yeah.
good thing. That's in the plus column for XRP.
Last question to you is Hyperliquid. This is something that continues to explode. We've seen all sorts of major moves within Hype. It's been one of the bright shining stars of crypto in general. What is your take on Hyperliquid? Where do you guys stand?
I like Hyper. I think that, I'm a supply and demand guy, and they take most of the fees they earn on the platform and buy back the hype.
Mhm.
So that's a really good fundamental thing. And I honestly, I wish I understood it better, because the only way that can sustain itself is for hype to continue going higher. Is for the price hype to continue going
Yeah,
higher. And things don't always go straight up. Okay. So, we've seen that with every market we've ever traded. And so I like hype. I like BNB. I like them for the same reasons, that there are incentives for people to use their platforms, and there are incentives for those tokens to be bought back. They're
right.
structurally being removed from the marketplace, and that's really good.
Well, now you've got perpetuals coming into the US. Now, this is going to be I think, a somewhat of a new market for much of the US traders who had to kind of play in the offshore markets in some cases, or figure out ways around it to be able to deal with that. How much of an impact do you think that has on the traditional strategies of investors? Is it a big part, or do you think it's primarily from the pro traders?
I think right now it's going to be primarily from the pro traders. The problem with the perpetual is it now becomes a twofold trade. It's a
Yeah,
trade around the asset of whatever the perpetual represents, and it's an interest rate trade. Okay,
exactly.
so it's supply and demand that goes out there. I think it tends, and I don't have the statistics on this, but I'm willing to bet that it makes up markets stronger and
Mm,
faster, because as
interesting.
there's more demand for the asset, the interest rates also go up, and that should be self-correcting, because then less people can afford to participate. But you just seem to get these snowballs of interest that happen. So
Yeah,
perps are more complex. People think they're easy because there's no roll involved. They're not,
right.
because of the interest rate component in there.
Yeah. Do you think Warsh comes in and holds the line on just higher for longer, or do you think there's any risk of a rate hike?
I think they would be insane to hike rates, but the market is saying that they might. So,
Yeah.
the market's never wrong. But if I were them, I wouldn't hike rates. Not with energy prices as high as they are. The energy prices are doing the work that a higher interest rate would do. And so,
Well, yeah,
if
that
energy
and
prices were to go back to pre-war levels, you could make a case for them to hike rates if the economy
interesting.
stayed this hot.
Yeah. Well, and you look at the real estate market, and we're starting to see dire signals in the real estate market that are showing some slowdown, significant slowdown, especially when you see something like Florida, where we're based, slowing down for the first time. Even though South Florida is kind of insulated, but it's a super unique
Yeah.
market. But the rest of the coast of Florida, we saw recessionary numbers. I think it was 12.1% of the real estate holdings in Florida had started reducing prices actively. So that's a very recessionary. You add a rate hike on top of that, whoo,
Yeah,
that would be
I don't see a case for a rate hike. not with all the other factors that we have. Now, understand the economic numbers, the strong, take real estate out of it. The economic numbers are pretty darn healthy. It's amazingly healthy. And so they're in a bit of a conundrum, which means just sit there, just stop, let the markets do their work.
Yeah, let the markets be the markets. Yeah. Sal Ghiberti, thank you so much for coming in today. We appreciate you stopping in.
Always good, Paul. Thanks.
All right, you guys know what to do. Make sure and like and subscribe, and we will catch you next time right here on the XRP Pod. Take care.